Hey everyone, welcome back to Corporate Decoder, the place where we peel back the layers of corporate filings, and let's just say this latest report from Beneficient might have us checking if our reading glasses are still on because things are a bit bumpy. So what's the big story here? Beneficient, the company we're looking at today, has just filed a report that's essentially a public announcement about some pretty serious potential trouble with its stock exchange. They're talking about the possibility of being kicked off the Nasdaq, and it's not for a minor oopsie. Before we dive in, if you're enjoying these no-nonsense breakdowns of company news, do us a favor and hit that subscribe button. And hey, we've built a fantastic community over on Discord to keep the conversation going. The link is in the description below. Let's get straight to the point. Beneficient received a rather stern notification from Nasdaq, the stock market where their shares are traded. The main issue is that their stock price has been too low for too long. Nasdaq has rules, and one of them is that your stock has dipped below that mark for a considerable period, meaning they're not meeting what's called the bid price requirement. Nasdaq gave them a 180-day window to fix this, which basically means they had until mid-July to get their stock price back up. Unfortunately, they didn't make it. So as of July 16th, Nasdaq sent them another letter, a determination letter, basically saying you're still not meeting the requirement and your securities are subject to delisting. Now, it gets a little more complicated. On top of the low stock price, there's another problem. Beneficient also hasn't filed its annual report, the big one that shows all the company's financial details for the year. This is a serious business requirement, and not filing it on time is like not submitting your homework in school. Nasdaq is saying this could be another reason to delist them. It's really important for companies to be transparent with their investors, and these filings are a key part of that. What's Beneficient doing about this? Well, they're not just rolling over. They plan to ask for a hearing with the Nasdaq hearings panel, which is essentially a chance to explain their situation and plead their case to not be delisted. They're also asking for an extension to the automatic pause that usually happens when companies are in this situation. This means they want to keep trading on Nasdaq while they sort things out. However, and this is a big however, there's absolutely no guarantee that the panel will let them stay listed. Even if they get an extension, they still have to meet certain conditions to prove they are serious about fixing the problems and will eventually be compliant with Nasdaq's rules. To share this news with everyone, Beneficient put out a press release on July 18th. This report actually includes that press release as an exhibit. It's how they're keeping the public informed about this critical development. Now, let's talk about how this impacts people. If a company gets delisted from a major exchange like Nasdaq, it's usually bad news for investors. It often means the stock becomes harder to buy and sell, which can lower its price even further. It can also signal that the company is in financial distress, which, as we've seen, is a real concern here with the ongoing compliance issues. We also see here the signature of Gregory W. Ezell, the Chief Financial Officer, and the date of July 18th, 2025, confirming the official filing of this report. Interestingly, the report also mentions that Beneficient is considered an emerging growth company. This classification usually means a company is younger and smaller, and it allows them some flexibility in reporting requirements. However, even with that status, they are still expected to meet basic listing standards like maintaining a minimum stock price and filing their reports on time. The filing also details the specific types of securities Beneficient has. They have shares of Class A common stock and warrants. Common stock is what most people think of when they think of owning a piece of a company. Warrants are a bit different. They give the holder the right to buy the company's stock at a certain price in the future. So there are different ways investors can be involved with Beneficient, and all of these are affected by the potential delisting. From a big picture perspective, this situation highlights a crucial aspect of the stock market. Rules and compliance matter. Exchanges like Nasdaq aim to provide a fair and orderly market for investors. When companies fail to meet the basic requirements, it raises questions about their stability and their ability to operate effectively in the public market. It's like a sports league having rules about player conduct or equipment. If people break those rules, they face penalties. Here, the penalty could be losing their spot on the Nasdaq exchange entirely. Looking at Beneficient's situation, the core issue is a lack of investor confidence reflected in the persistently low stock price, while they are actively trying to rectify the situation by requesting hearings and extensions. The fact that they've also failed to file their annual report suggests there might be deeper operational or financial challenges they are grappling with. It's not just about one rule, it's about a pattern of not meeting expected standards. One of the biggest risks for investors right now is the uncertainty. Will they get the delisting stay? Will they be able to meet the conditions to remain listed? The company itself acknowledges in the filing that there's no guarantee. This uncertainty can lead to further drops in stock price and make it difficult for the company to raise capital in the future. In my view, Beneficient is in a precarious position. The delisting threat is serious, and the failure to file their annual report is a red flag. While they are taking steps to address the issues, the path to regaining compliance and rebuilding investor trust looks challenging. We'll need to watch closely to see if they can successfully navigate the Nasdaq hearing process and address their reporting obligations. If they can't, it will significantly impact their ability to function as a publicly traded company. Alright, that's our breakdown of Beneficient's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.